morning, StockTwits Nation. It is Monday, June 16th, 2025, I think, 2025. We are here, of course, with Tom Bruni, Editor-in-Chief, VP of Community at StockTwits. I'm Katie Perry, and Shay is out for the day. Tom, what's up? What's it like to be on this side of StockTwits?
What's going on, Katie? Yeah, thanks for having me. I'm a little upset with Max and Keith that they didn't get the thumbnail updated. I
I
think people were expecting
know.
Shy, but all good. Yeah, excited to be here Monday morning. Lots to talk about, and excited to share some insights from the community.
Yeah, excited to have you here because you're kind of at the center of a lot of the conversations and the sentiment going on. And you could almost be our community correspondent. In addition to, I know you're following a lot of things yourself. On the thumbnail, we'll have to get it in the YouTube clip, like a crazy reaction thumbnail. So just make
Exactly.
sure you
Yeah,
make like a
I'll
dramatic
make sure to
face.
do some crazy faces
Yeah,
throughout,
like this
and
thing that they do or
yeah,
whatever it is.
we'll have our pick of the litter by the end of the stream. So
Amazing. Well, let's quickly look at what's moving the markets this morning, and then I know we have some deep dives and some good visuals for you guys. I see people already dropping questions in the chat, so that's awesome. And let us know what you guys want to talk about as we're going. We'll try to get to as many of those topics as we can. So obviously, Middle East tensions are rattling the markets. Israeli strikes on Iran. Global markets are holding steady. Uh, we also have oil was spiking over 7% on Friday. That has since stabilized a bit. We'll take a look at that more later in the show. Fed decision. That's coming up this week. They're meeting. May inflation was mild, but there's some new, fresh geopolitical risks. Potentially could shape the rate path, but who knows? And gold swinging on global signals. So lots going on. We also have some interesting earnings this week that will shed light on like what's going on in the consumer space. So let's start off with the Fed decision, Tom. Um, let's pull up like I think let's start with like what the market's thinking is going to happen, what you're thinking is going to happen, and how this latest drama in the Middle East might impact what goes on.
absolutely. So I think for the base case is that there's a 97% chance, according to the bond market, that the Fed will keep rates unchanged. So that's widely expected. From a expectations perspective around what Powell will say, not really a whole lot has changed in the last month or two since we last heard from him. He's been very conservative in terms of leaning in either direction. They're only making small changes to the wording each time they put out an update. They're kind of in wait and see mode. Prices are relatively stable, still above the Fed's target. And the labor market continues to show strength despite a lot of reasons why it probably shouldn't. And so the Fed is kind of in wait and see mode. Unfortunately, like the tariffs and other the impacts of the geopolitical climate we're seeing are not yet in the data that the Fed is relying on. And so they're really not going to say a whole lot. I think the big update people are looking for is around the quarterly projections. Last quarter, basically, they raised their unemployment rate expectations for this year and next slightly. They raised their inflation targets slightly, and then cut their growth forecast slightly. So if we see that trend again, where they're kind of cutting growth expectations, looking for a weaker economy, but inflation staying somewhat elevated, then we start to get into those conversations around stagflation, where you have elevated prices and slow growth, which is not a good situation for anyone.
Yeah, and based on what you're seeing, are there any projections of when a rate cut could potentially happen in the future, or is it really just depend on what they're looking at on a month-to-month basis?
Yeah, so the bond market is looking for the first cut. It's got a 58% chance in September. So, that's where we're looking. Again, I think it's going to take the full summer to start to see the impact of some of this tariff stuff and the rest
Mhm.
of the geopolitical stuff start to get into the data that the Fed has to rely on. They're not in the business of speculating. There are a lot of potential impacts of what's happening right now on inflation and on unemployment, but until they start to see some hard data, it's going to be difficult for them to, preemptively do anything in terms of policy decisions.
Yeah, let's flip over to inflation, and also you've been monitoring crude oil futures. I think we have some charts there. Would love to step through those with you. That was a big headline on Friday, continuing over the weekend, obviously with everything going on in Iran and Israel. What are you seeing in the crude oil futures that catches your eye?
Yeah, so I'm a technical analyst at heart, a CMT. I'm also a CPA, so I can play both sides. But I'm a trend follower. For the last 3 or 4 years, crude oil has been in a downtrend. Right, we peaked above 120, 130, and have been trending lower since. I think the expectation was that we were going to see that continued lower trend in crude oil. That would be a tailwind for inflation. But now we're seeing, with the Middle East tensions, we're seeing the exact opposite, and we have um, what technical analysts like to call a failed breakdown. And to make this simple, right? Basically, all along the last decade of price action, you can see that there are clear inflection points around that $63 to $67 level where there's indecision. Buyers and sellers are, really battling each other and trying to decide which direction they're going to go. And so you see a lot of turning points at these areas. And so the expectation 6, 8 weeks ago when we broke below that level was that, hey, sellers are in control and we're going to see, sustainably lower crude oil prices ahead, which would have been a major tailwind for both the economy and the inflation metrics. Now, because of what we're seeing in the Middle East, Iran is 3 to 4% of global oil production, but bigger picture, the concern is that the U.S. gets involved in a prolonged war or conflict here that kind of drags on economic activity here. But this development has pushed us back above that key level. And so what happens is you get all of the people that were looking for a breakdown initiating positions on that breakdown. So you have fresh short sellers, you have longs liquidating their positions, and you have people just throwing in the towel and saying, you know what, crude oil, I'm writing it off. It's in a downtrend. I'm not going to touch it. Now we have a situation where those positions need to be unwound very quickly because of the situation. And so essentially what we're seeing here is prices getting back above this level. Shorts now need to cover. Longs that sold previously are like, oh man, like I was right initially and I sold my position. And then we have longs that were involved that were like, man, I didn't buy enough. And so what you get is this environment where any dip is now going to be bought by those three parties. So you have a new supply and demand imbalance that's now shifted to the demand side. So, technical analysts from a trend perspective, obviously this is still messy, but they're seeing this as a key inflection point. And as long as we're above that, mid 60 level, the expectation is that buyers are in control and that higher prices are ahead. So, again, the Fed is not using technical analysis to determine their policy decisions, but if we do start to see crude oil trend higher as many are expecting, then this will be a major headwind for inflation and the overall economy.
Interesting. Yeah. Thank you for spelling out the various parties that are impacted by this, different types of traders. Uh, it is interesting to see the trend going one way and then all of a sudden reversing course and people needing to make moves. And so it's helpful to understand those impacts. Um, let's scroll over to the state of stock market investing in the US overall, households, how they're feeling about financial assets respective to equities. I believe we have a chart from Goldman.
Yeah.
Goldman saying that U.S. households will continue supporting stocks. Walk us through kind of what you're seeing in that trend.
Yeah, so I mean, this is not anything new. Essentially, U.S. households have been, allocating quite aggressively to equities over the last, decade plus, given the performance and the strength of the overall economy. So we're now at a point where roughly 50% of, financial uh, asset allocation per household is allocated to equities, and so um, essentially, what essentially what Goldman is saying here is that people are continuing to allocate funds to equities. They're not concerned about valuations. They're not concerned about the war in the Middle East. They're not concerned about all these other things. And I think this really comes back to the labor market and how the overall economy is doing. If you think about the mechanism that supports stock prices over the long term, it's people have jobs, they have 401ks, more people are involved in markets than ever. And so if you have that disposable income, what are you going to do with it? You're going to spend some, you're going to invest some. And so we've had this major tailwind where we had a strong labor market, we've had strong equity performance, and all of those are contributing to people having this positive feedback loop that, hey, every time I buy stocks, it's turned out to be a good thing. And so as long as people are employed and equity market performance continues to hold up, then I think this will be a continued tailwind for U.S. equities. I think the bigger question here is less about what's happening with U.S. stocks and overall equity allocation. It's given the outperformance we've seen from international stocks over the last 6 months, do we start to see people reduce their US allocation and start to increase their international exposure, which has been, you know, uh, a major drag for the last 15 years. I've had 50% of my portfolio mixed between, developed markets, ex-US, and emerging markets, and it's been a drag, but they go through major cycles. And so the question now is this a major turning point in that cycle where international starts to shine again? I'm not so sure, but I think long term, if you're diversifying, it pays to have some exposure
Yeah.
internationally.
Looking at kind of what the community has been talking about, or even sentiment checks in StockTwits, are you seeing indication of that trend? People curious moving to international stocks. I'm curious. Times like this, it almost feels like psychologically you might think, "Oh, I'm too late. I should have had that position before." Are you
Yeah.
seeing any signals in the community where people are looking to do that?
So a lot of people in our community are focused on individual stocks. So we're seeing more activity around the international ADRs. So, foreign stocks that are listed here. So, the classic Alibabas, the Novo Nordisk, the Eli Lilly, like these kind of international companies, or companies that have significant international exposure are kind of the focus. In terms of broad-based exposure, you know, ETF exposure to key themes like emerging markets or Chinese internet stocks, like there are certain pockets where people get really interested in, but I do think the most interesting developments we're seeing are on the individual stock side, where if people are like, hey, I'm a fan of Amazon in the US, but I want exposure to an international version of that, maybe I'll buy Mercado Libre, which is the South American version. So I think there's a lot of activity around individual names and less so on the ETF side. With that being said, I don't think just because our community is not talking about those ETFs on our platform doesn't mean they're not allocated. Typically, what we're seeing is people will have a portion of their portfolio that's kind of the low and slow investing. They'll have their S&P 500 index, they'll have their emerging markets index, and they're putting money in every paycheck, as we discussed. But for the remaining portion of their portfolio, where they're looking for the next big winner, they're looking for big opportunities, they're focused on individual stocks because you get more growth potential there. For
Yeah.
an ETF or an entire market to go up 10x, that would require decades. But if you can find the right stock in the right country at the right time, you might be able to find something that'll 10x in a much shorter period. So
Yeah, it makes a lot of sense. Even just thinking about how conversations online about specific pockets of the market or stocks would tend to skew towards things where people are actively making decisions, and
yeah,
it might not always reflect kind of the flows overall. Because to your point, a lot of the flows could be going to things that, like, frankly, aren't worth talking about. People don't aren't want to
yeah.
talking about in the chat. But I think that makes a lot of sense, even when we look at like kind of what's trending, to look at that through the lens of these are of the active decisions people are making, these are the names.
Yeah. And I think, there are times to talk about the indexes. I know market breadth and different, index construction. I know last week or 2 weeks ago at this point, people were upset that the S&P kind of snubbed Robinhood and didn't include it in the index. So, there were certain points where the construction of these ETFs become important or, relevant for people to talk about but for the vast majority of time, people are focused on individual stocks where things are moving and they can have a much clearer edge in the market. But to take it back to your original question around like what we're seeing in the StockTwits community, overall people are still bullish. So we rolled out our StockTwits sentiment index about 2 or 3 weeks ago. Essentially, what that shows is in the aggregate, are people more or less positive about the overall market and the market of stocks that makes up the indexes. And so right now we're at this kind of critical level around the one level. I don't know if Keith, you can pull it up, the StockTwits sentiment index right on the homepage, but essentially we're at this one level that's differentiates between fear. Fear is above one, and opportunity or greed is below one. And so we're kind of hanging around that level for much of the last couple
Mm,
weeks. And I think that's a reflection of the overall uncertainty that we're seeing in the market. Obviously, there are a lot of risk factors right now, and so I think we're seeing people start to price some of that in. And after a 20% run in the S&P 500 since April, it makes sense for some people to take some risk off the table and kind of see how the next few weeks pan out.
yeah, the sentiment index at a high level, where's the data that's feeding into this generally? What data is that?
Yeah, so it looks at the entire platform, individual posts, and basically says are the vast majority of them leaning bearish or bullish. The reason that we kind of moved beyond that language and viewed it as risk and opportunity is because we want it to be somewhat comparable to the CBO volatility index. We view these as complementary things as opposed to direct competitors or using one or the other. The volatility index obviously shows what the options market is pricing into the S&P 500 market in terms of the next month worth of daily percentage price moves. Um, Sorry, that was a word salad.
That's
Essentially, the VIX is looking at what's the option market pricing in for the next month worth of volatility. So
mm,
how much will the S&P 500 move on a daily basis is what it's pricing in. This is using real-time conversation to figure out how people are feeling right now about the stocks that they're trading in the aggregate. And so because we have such a large community, we have all these active people on the site talking about, every stock under the sun, we have a better view into how their mood is changing, and this updates every day after the close. And so you get a fresh reading and you say, okay, after full day of action, how are people feeling? And so anyway, they're
yeah.
meant to be used as complements as opposed
Yeah.
to one or the other.
Yeah,
That
that
makes
makes
sense.
sense. Yeah, that makes a lot of sense because it's interesting too. If you're monitoring conversations, it's not necessarily driven by trades, but this could be indicative of what could happen if people are talking about something. Maybe that trade hasn't happened yet. So it makes sense, I
Yeah.
think, to put them both together as you're looking ahead.
And that's kind of the thesis, right? Like people will, have an idea, they'll discover an idea, they'll start to talk about it. Maybe they'll, share their research, get some feedback, and then make a decision in the market. So if you're monitoring that conversation early and seeing where that attention is flowing day to day, then you can get a sense for where people might be taking action in the market eventually. So,
Yeah.
um, yeah, it's been a good early signal in several cases, and so I think it's an important part of the tool belt.
Yeah, I mean it's powerful stuff because like from my world of marketing, this sort of like social listening sentiment has been baked into kind of how businesses are making decisions on the marketing front. And it's
Yeah,
been less so in the financial space, but Pinterest puts out a trend report every year that's based on percent increases of mentions of certain types of trends or products. Google Trends is also a huge signal that people look for. What are people searching for because they might then do it or buy it? So I think this is almost the equivalent of that, where it's an interesting layer that you really only get if you have that big community of people feeding enough data to make the information actionable.
yeah, exactly. I think again, the other piece of this is that sentiment tends to only matter at extremes. So this is not like a daily thing that you're gonna be changing your portfolio based on. But as we know, when everyone gets on one side of the boat or the other, that's when opportunity or risk kind of presents itself. And so I think this is a tool that people can check in, at the end of each day, just get an updated reading and start to use that as part of their way of viewing how the overall market is feeling.
Yeah. On the original thing we started with on the households flowing into equities. I want to
Yeah.
ask, there was a conversation like in May about like, is the 60/40 portfolio dead? I'm curious what your thoughts are on that. Someone with your background. Um, a lot of that was tying to just the lifespans increasing, but also there's, things like crypto are more normalized. People are more
Yeah.
interested in private investments. What are you seeing that sort of theme play out, either kind of in what you're doing or what you're seeing in the community?
I think it's an interesting conversation, but I think bonds will always have an important part of any portfolio, especially as you get older, right?
Hmm.
People talk about the volatility reduction in the portfolio and diversification benefits, but at the end of the day, bonds also provide an income stream. And so if you're 65 and you need, X number of dollars per month, you're going to have some allocation to bonds, whether it be, you know, uh, through a CD or like a treasury bond or some sort of corporate bond. What you'll typically do is instead of eliminating that exposure entirely, you'll just reduce the duration so that you're taking less risk. But I do think the 60/40 conversation is being dead is something that comes up anytime that bonds underperform and
Hmm.
then they rebound and then you're like, oh, actually it's not dead. So I think it'll still be an important part of financial planning, but I do think a lot of people are looking to alternatives. I think we've seen a very um, large increase in the number of like income related ETFs. I know there's
Yep.
like the MicroStrategy income ETF for
Yep.
the individual stock based ETFs that produce income by either selling options or taking up some other action there. So I think for people who are more active in the market, specifically our community, those are more attractive options than like a traditional, treasury bond ETF. With that being said, when we do see a significant rise or fall in rates, you do see activity pick up, and TLT is the most liquid treasury bond
Hmm.
vehicle. And then some of the inverse ones like TBT, which is a 2x short version of it. So people do trade around it. In terms of their core portfolio allocations, given the types of folks that are on StockTwits and how active they are in the market, I'd say it's probably less of a concern for them.
Yeah.
But yeah, I don't think the 60/40 portfolio is dead. I think it will just take on a different form to adjust for being in a rising rate environment as opposed to
Yeah.
a falling one.
Yeah, it's certainly a very click-worthy headline. But to what you're saying, we had a guest on last week from the XC, which is a stable coin that they have like yield producing stable coin. So it's like that people are
Yeah.
still looking for income in that type of investment, but maybe there's just more vehicles now to choose from. It might not be, a bond index.
Yeah, exactly. And ultimately, even with stable coins, right? What do they tie back to? They tie back to treasuries. So it all kind of
Yeah.
comes full circle. You can um, financially engineer anything these days in terms of the packaging and the overall effectiveness or what an individual product does, but they all tie back to the core financial assets of either equities or bonds or cash at some point.
Yeah.
To your point, also like maybe instead of a traditional 60/40, some people are including crypto as a sleeve of that, so maybe
Mhm.
they'll reduce a portion of both their equity and bond portfolio and add crypto. um, I think that's probably something in younger individual investors are doing because they're seeing the potential growth as well as risk of something like a Bitcoin in their portfolio. And obviously, over the last decade, it's anyone who has included even a small portion of their portfolio in Bitcoin has been rewarded. So
Yep.
I think those are the conversations that are being had, and I think that's why we're seeing so much institutional adoption is because clients are going to their advisors and saying, "Hey, there's this new asset class out there. I see it performing. How are we getting involved in it in some way, shape, or form?" So I don't think that's going away. And, the bond market, given we're in a rising rate environment, is probably a good place to, you know, reduce some of that allocation and look toward alternatives.
Yeah, let's stay on Bitcoin for a sec because strategy, it's of course Michael Saylor, added 10,000 Bitcoin to the treasury in the past week. So they now own about $63 billion. worth of Bitcoin. The purchase was funded by a preferred stock offering and share sale. So another bold bet from them. Interesting, I noted in a CoinDesk article pointing out Strategy now holds more Bitcoin than most countries. Their average buy-in price is about $71,000. And to what you were just talking about, Tom, they are saying that the institutional demand is quote unquote insatiable. And I think that you're seeing them kind of follow the consumer patterns there. Um, let's talk about
Yeah.
this people, adding it to the balance sheet. I looked into it. It seems like about less than 1% of publicly traded companies hold Bitcoin on their balance sheets, at least the ones that are reporting it. So
Yeah.
based on what I was able to look up. So we're still very early on this, even though we keep hearing more and more companies doing it. What are you seeing across the likes of Strategy, GameStop? Uh, from your viewpoint, where's this trend going next?
Yeah, this has been a big question from reporters. I keep getting asked about how the community is feeling. We had GameStop last week making headlines, so there's a lot of conversation around this right now. And I think the way I've been summarizing it is Bitcoin proxies, like Strategy or like GameStop or like even SBET, more recently are losing their luster with retail investors and traders. And I think the reason is pretty clear. A year ago, even there were much fewer ways to directly access Bitcoin or crypto exposure in your traditional financial account. And so something like a strategy offered you the ability to add that to your portfolio to get that Bitcoin exposure. Now we've got spot ETFs, we've got leverage ETFs, we've got options on all those vehicles. There has never been It's never been easier to get crypto exposure into your account. And so you're seeing people now question, why would I buy this shell company essentially that's issuing a ton of debt to um, ton of debt and equity to buy Bitcoin, to make a leverage bet here when I can just make a leverage bet directly on Bitcoin. So I think that's kind of the shift we're seeing. And the market is kind of speaking for itself here. In November, we saw strategy kind of leading to the upside. It made new highs before Bitcoin. And people were saying, hey, this is a um, indicator of high risk appetite in the crypto market. People are expecting a breakout in Bitcoin. Now we're seeing the opposite. Strategy is down 30% from its highs, and Bitcoin's right back at its highs. And so we're seeing this kind of change of character, I think. And there is really fewer and fewer reasons to be involved in these types of companies who are just either um, essentially they're just using financial engineering to
Yeah.
buy an asset that they are speculating will continue to appreciate. So I get it. I understand kind of the bet they're making, but if you're a day-to-day investor, these are great trading vehicles. But if you want to own Bitcoin, just you can just own Bitcoin at this point.
Yeah, it would almost seem like if you were to kind of put money into these companies that are acting as proxies, you would have to not only believe in crypto or Bitcoin fundamentally, but also in the company's ability to use the gains or profits from that holding to do something else with their business. And I think that's what you're
Yeah,
seeing with like a GameStop where people are like, okay, what are you doing with that? And I think it adds another layer. Like that's not the only reason to invest. You need to understand like and believe in what they're gonna
yeah.
do given that position.
Yeah, there's a I always get a little bit of heat when I talk about GameStop in the media because we have a core community of people who are on StockTwits that really believe in in Ryan
Yeah.
Cohen and his vision for the stock. But it really comes down to what you just said. There's no fundamental business here. Financial engineering is how they were able to reduce their debt on their balance sheet, get to a point where their cost structure is in much better spot, but they haven't figured out how to grow revenue. And so until they can make a profit from their core business, it's just not that interesting.
Mhm.
Um, all right, we got the opening bell. We're up about 1% here in the S&P,
Okay.
1.5%, 2% in the Nasdaq. Bonds are down. So yeah, we'll keep an eye on that as more stuff comes in. But sorry, I wasn't expecting the the bell sound in the
I
background.
know. Yeah. I mean, that's one of the things we do here. We like to I'm always surprised by it when I talk to Shy. Like I always know it's coming and then I'm like, "Oh."
Yeah,
it
I felt like
jolts
it was the
me.
music, like, playing me off at the
Oh
Oscars or
no.
something, like, let's get to the good stuff.
You
But
know what's
anyway, going
funny?
back to
Yep.
GameStop, like, I think the core piece here is that they haven't fixed their underlying business yet, and people are seeing through kind of the gimmick of just buying Bitcoin as a strategy. So here we basically have a timeline. So March 25th, they changed their investment policy. We got an initial pop in the stock. 2 days later, they issued a convertible note to go out and buy Bitcoin. I think it was 1.3 billion. Didn't do much for the next month. May 22nd, basically rumors that they started to buy crypto. Stock ran up. May 28th, they finally confirmed, like, hey, we went out and purchased Bitcoin, and the stock plummeted. And then, 2 weeks later, they issued more convertible notes to go out and buy more Bitcoin and crypto. And so the point is, we are back below levels where this originally started. And so I think the thesis that I'm outlining is clearly playing out here. People want to see if you're adding Bitcoin or crypto to your um, balance sheet and your company's treasury as a supplement to your core business strategy, great, like, awesome, people are excited. But
Yeah.
if that is your only business plan, then, like, it's not that interesting. I'll just go buy
Yeah.
Bitcoin directly somewhere else. And so GameStop needs to get out of this financial engineering, hole that they're in, and actually fix their core business. And if they can do that, then the stock will skyrocket because their balance sheet's in great shape. And there's a lot of opportunity there. They just haven't put in the effort to figure out how do we grow revenues in selling video games and collectibles and everything else that they do day to day. So
Yeah, you're
yeah,
right. They seem to be, so I don't follow them as closely. I'm curious what people think in the chat of like what is their message to retail investors? What is their thesis outside of we're buying Bitcoin? I know they talked about moving into trading cards. Um, I don't know if I haven't come across like a very simplified like this is the strategy. Are they putting anything out there in a coherent fashion of like what that looks like, or has it been sort of like trading cards and then we're gonna do collectibles? Like, is how
yeah. I
how
mean,
well are they articulating?
they're not articulating at all.
Like it.
Their hope is that Roaring Kitty will come back and send the stock higher again, and they'll be able to issue more debt or more shares and raise more money. That's all they've been doing is using these opportunities in the market where their stock pops and gets away from its fundamental value to issue more equity and raise more cash so that they could eventually do something with it. What they're
Yeah.
choosing to do with it right now, not that interesting in buying Bitcoin. But yeah, they haven't held a conference call in about 8 or 9 quarters. They're just radio
Right.
silence. Every quarter they come out and say the same thing. Hey, we cut some more costs. Our revenue growth is down again, but we're going to buy Bitcoin or do something fancy. So, I would love, as somebody who frequented GameStops quite a bit when I was younger, I would love if they could make a comeback.
Yeah.
But I think for now they're still lacking that fundamental strategy. So
Yeah.
Ryan Cohen, if you're listening,
Come on the
figure out how to
show.
sell some video games. Yeah,
Yeah.
yeah, come on the show
Come on
and
the
talk
show.
about
Tell us
your
what you're doing. Explain
yeah,
yourself.
exactly.
You're right. They have a lot working in their favor, like the nostalgia of the brand. I do think collectibles, trading card, those are things that are all like picking up steam.
Yeah.
My brother started actively trading cards on eBay a couple years ago, and it's like a whole side hustle for him now.
Yeah,
But
I
it's
think it's just one of those situations where people are looking to get something for nothing.
yeah,
Like doing all of that stuff, it takes work. It's hard to build a brand around those kind of
yeah,
fragmented markets, and that's the hard work they're going to have to do if they want to have a sustainable long-term business. But for now,
yeah,
they're just opting for the easy way.
yeah.
So
Open invite to come on the show, talk directly to the people. We love when CEOs do that. It's great, and you can get right in front of them. So, Ryan, if you're listening, you should definitely come on our show. You brought up Roaring Kitty because I hadn't even thought about him in a minute. We are just talking about earlier before we got on the air of like how fast the news cycle goes. Do you know
yeah.
when the last time he's brought up GameStop, or has he just been like keeping a low pro generally for the past few months?
I'll be honest, I don't know. I'm gonna look up right
I feel like
now.
if we
Fun
don't know, he
fact.
probably hasn't.
Yeah, exactly. Fun fact, I am one of the 91 people that he follows on Twitter. And I will forever have egg
Wow.
on my face because I was going back through my Twitter history and I think it was October 2019 or right before things really took off, he had tweeted me and a bunch of other technicians asking for our thoughts on what we thought of GameStop's chart and had this whole like write up. And like I must have missed it in my notifications.
What?
And then obviously the stock blew up and he became this sensation. And so, yeah, if I would have just checked my DMs or my notifications a little closer, I would have been a GameStop millionaire by now. So,
Well, that's interesting because at the time you probably weren't following as closely as him, but looking at what he was looking at, would you have bought into his thesis that he had, or was it more like he had this thesis, he really believed it, and then he became big and people followed him, and that created the
um,
what happened?
yeah, I think the stock had all of the components needed to create a smash hit. And I think when you add kind of the retail frenzy behind it, that's why you got such an outsized move. But honestly, the stock went from like four to, I don't even know, like hundreds of dollars. I wouldn't have held the whole way.
Yeah,
Like I probably would have been in at four and, taken the double at eight
yeah,
and moved on.
seriously,
So,
yeah.
I don't know. Kudos to him for sticking with it for such a long time because most people, were kind of trading it in and out and not, part of the full journey. But anyway, so Roaring Kitty, if you're out there, my bad. Sorry. I
Yeah,
will pay
that's
attention more closely.
check the DMs. I'm worried that's
Yeah.
gonna happen to me on like a dating app where like John Mayer's like, "Hey, you seem interesting," and I'll just like not see it because I'm delusional. But that's
No, I,
amazing.
I believe it. It could
Yeah.
happen.
I mean, my name is Katy Perry, and that is his ex, so maybe he
There
got
you go.
confused. I don't know. We're waiting for that moment. He can also come on the show if he wants, even though I know knows nothing about any of these things.
Yeah. Him
But
sending a late night text to the wrong Katy Perry. That would be quite interesting.
I do get a lot of like on my Instagram people not realizing because I bought the blue check mark on Instagram
Yeah.
because you could buy it there. So I was like, you know what? Yeah. But I people will send me like music, like videos of their kids playing instruments and stuff, and I'm like, oh my god, they're amazing. And then they write back all excited before they realize like I'm just a random person on the internet.
That's so funny.
I know.
Yeah, I do not get any as many fun DMs. I mainly get, "Hey, can you promote our crypto coin?" I'm like, "No, I'm not
He still
interested in
follow
that."
so well, if he still follows you, we can clip this, tag him in it, bait him in, do an appearance on the show. There we go.
Yeah, Roaring Kitty, come
Come
hang
back.
out, tell me why I'm wrong on GameStop. Help them get a strategy. I don't know. He should be on the board or something. I don't know. I
Yeah,
think
I feel
I
like
think
he's
he's just
just
hanging
chilling.
out at this point.
That's right. I'm like, this guy's just chilling. Like he doesn't have to
Yeah.
do anything now. I wouldn't, but
I think he's
uh
just having fun with all of us. We're all waiting with bated breath and just
yeah.
hanging out on his timeline.
A
So we shall see.
fascinating story. I know we also like stay on Bitcoin for a bit because there is this ongoing conversation of crypto risk asset, uncertainty hedge. People use it both ways.
Yeah.
I think we have some new StockTwits polling on when the crypto twits community would think that Bitcoin will hit 150K, and it looks like a lot of them think it could be pretty soon. So I want to talk through. We pull up that survey result and talk through kind of what we're seeing there.
Yeah, so initially we did this survey in I think it was April toward the lows of the market and we're basically like what's your sentiment on Bitcoin? And even then, I think 45% of respondents said that they expected Bitcoin to hit 150K at some point in 2025. And so now that the market is back at all-time highs, we figured let's go back to that well and see, what a more precise timeline for people is. And the most aggressive being before July, so essentially in the next 6 weeks or
Mm.
oh sorry, 2 weeks. It's June
Yeah,
already.
very
So yeah, I
aggressive.
think there's a level of aggressiveness here, but I think the point is most people are still expecting that 150,000 timeline because the fundamental picture has not really changed much for Bitcoin. Um, you still have the tailwinds of monetary policy and dollar debasement and kind of the core tenants that people who are investing in Bitcoin for the long term are trying to hedge against. And then you have kind of the bull market that's happening in risk assets. So Bitcoin and crypto in general can be both a risk asset and a hedge. It just depends on the situation. if you need any more evidence of that, just check out on the weekends. Like if we get, a negative headline, right, and it's a Saturday, funds can't go out and sell their stocks. They can't
Mm.
go out and sell traditional assets. The markets are closed. And so Bitcoin will get hit. They'll use that as liquidity. And then Monday, when the market opens, or Sunday night, then they can adjust their position. So anything that has a volatility level as high as Bitcoin has to be classified as a risk asset. It would be kind of asinine to not suggest that it's a risk asset. But overall, I think the people that are holding it and buying it for the long term do see it as a hedge against kind of the debasement of currency, globally, whether it be in the U.S. or elsewhere. So, yeah, the StockTwits community is bullish, and again, the way they're expressing their thesis is less around these kind of Bitcoin proxy companies and more around companies that are fundamentally tied to crypto. So we had the Circle IPO.
Yeah.
Obviously, that took off. Stablecoin market is quite hot right now, and so we saw that stock really take off. And I don't know if we have a poll for that, but
I
I
think we
think
should. Yeah, this was an interesting
roughly,
poll. Yeah.
yeah, I think it's 36% of people on the Circle IPO day said that they were buying for a long-term investment. 20% said for a short-term trade, and then 10% were trading it, and a third were avoiding it altogether. So people are interested in crypto, but they're being more discerning about the ways that they play it because they have a lot more options now. And so if you have a core business that's tied to crypto, people are excited. But if you're just playing the financial engineering game and don't have much else going on, then it's less appealing to retail investors right now.
Yeah, IPOs in general. I mean, we've seen Chime came out last week. We had obviously eToro. How do you sense what's the IPO appetite or excitement in the community right now? What does that look like?
I think it depends on the type of company and what they're doing, but we're seeing, especially on the institutional side, a lot of these companies coming public are either raising the amount that they're offering, or pricing above their initial range, and are being oversubscribed, and so there is clearly appetite there. I think a lot of the initial hype around IPOs is around the trading momentum that happens initially. So, obviously, if something's oversubscribed and it's set to open up, people expect there to be price momentum there. So, we're seeing a lot of traders take advantage of that volatility. But on the investor side, it really depends on the issue. Like I said, Circle was kind of a big hit. Chime was not so much. We had a lot of people on StockTwits kind of debating SoFi versus Chime. What's the
Hmm.
difference? There are a lot of SoFi bulls on the streams, and so they were kind of battling it out and trying to figure out, who's going to be the big winner there long
Yeah.
term.
We had Daniel Newman on the show Thursday, and he was kind of making the case that you do tend to want to pick a side and pick a team, but he's like, I own Robinhood, I own SoFi. Like
Yeah,
you could own both of them. But I do think people it's sort of that tribalism with stocks sometimes. Chime to me is interesting because I feel like it almost reaches more mass market than SoFi, even though SoFi's products aren't necessarily like luxury.
yeah,
But I feel like Chime has some slightly different audience, although there's probably a lot of overlap.
yeah.
But to his point, he was like, if you believe in neobanks and these products overall, you don't have to pick one thing. You could own both of them.
Yeah, it doesn't have to be a winner takes all type situation, and they all have different strategies and goals and ways that they're approaching the market. So I think there's room for both, depending on what you're trying to play. But yeah, I
Yeah.
totally agree. I think SoFi, Robinhood, Chime, all things to watch, and obviously Robinhood's the one trading at all time highs, so it's getting the most exposure right now and kind of fanfare. But we'll see if SoFi can join it.
Yeah, to Robin real quick, you mentioned what people are calling a quote unquote snub. Have you seen any reports or indication of why they weren't included, or is it kind of like up in the air? They got to wait their turn a little bit longer. I'm curious if you've heard anything because I remember following it when it happened, but I was kind of like, okay, well, why would that be the case? Do people have an opinion on why that might have happened?
Yeah, I don't have any strong views here. I think people are just speculating. they probably just want to see more from the
Yeah.
company in terms of quarter over quarter, like consistently hitting the metrics that they look for. But yeah, I don't have any
Yeah.
real insights here, and the community was just more upset than
Yeah.
anything. But I think going back to the technicals, the way that the stock responded to being snubbed is very important in my view. We broke out to new all-time highs around the $70 mark, and initially the stock was down $5, or roughly 10% after hours on that Friday when the news didn't come out, and then Monday it opened, traded down, excuse me, and the dip was bought. So to me, that shows that there's demand here, that people are sticking with the stock regardless of what happens in the index, and that people are betting on much higher prices in Robinhood to come. But I think the recent lows near 70, where it initially broke out, mid 60s, 70-ish, is as long as it can stay above there, people are generally bullish.
Yeah.
Although
Oh, go ahead.
interesting to see, Keith, that the sentiment is neutral right now. So we shall see if that shifts over to bearish at any point.
Oh,
But
interesting. They do have, I believe they have an event coming up in France. I want to say in July. Uh, they've put out some like mysterious collateral around it. People saying it might be around tokens. But that I think that'll be something to watch as well.
gotcha.
Vlad, who's been on our show, yeah, very mysterious branding. But it just like they've been hinting at things of their worldview beyond crypto stock trading and trying to be this
Yeah.
sort of financial ecosystem for the next generation. So I think that'll be an interesting one to watch too, because they seem to be putting a lot of investment into this event and driving hype around it.
Yeah, I think they've Vlad has obviously gone through a lot of I don't know, he's just his approach to media and the way that they're taking it to investors, and really getting out there and putting themselves out there, and being definitive and saying, here's what we're doing, here's the bets we're making. I think a lot of companies can learn from, and
Yep.
GameStop being one of them. So Ryan Cohen, take some notes, get out there, tell people what you're doing.
That's where my brain went to. I think just telling that story, and also just simple things like they're repeating it over and over again. It's you
Yeah,
can't make one statement one time and expect people to get it. And doing it across different
exactly.
channels. He's on Fox Business. He's coming on StockTwits. He's on X. But yeah, I think they do make for a good case study and just how to articulate a strategy and make sure people really get it. Um,
Yeah.
Flipping over to some other things going on, we're following the Nippon U.S. Steel deal that's going on. So the Trump administration is brokering a controversial deal, allowing Japan's Nippon Steel to acquire U.S. Steel. So this would be under the condition that the president would hold a golden share. So that would give him veto power over major decisions, including factory closures, job offshoring, and even the company name. So
Yeah.
there is historical precedent for this. So like the UK, the EU, they've done this. Russia has this type of setup. It has been very rare in the US. Um, that's one I think to follow. I think if we pull up the chart, I'm curious kind of what investors are looking at with that one, or if Tom, you're seeing anything in the community about where this one's going.
Yeah, I mean, right now it's trading right around its, buyout price. So I think the expectation is this will close even with the stipulation of the
Yep.
golden share. So we shall see. I think more generally we're seeing a lot of activity around the materials sector. So as we're onshoring a lot of these things that are important in national security, whether it be the materials itself or refining, or the manufacturing associated with them. We're seeing a lot of activity in the material sector. So stocks like Cliff Natural Resources, other competitors to X, are also seeing a lot of interest, because the thought there is, if we're going to see a commodity super cycle in some sense, if we're seeing gold and silver trade at all-time highs, we saw platinum and palladium break out, copper is sitting near record levels. So if we are going to see the next leg of that commodity cycle, which would be bad for inflation, it would be good for these companies. So a lot of mining stocks, a lot of energy stocks outside of traditional oil and gas are catching a bid, and people are paying attention to them a lot more than they had been, say 6 months ago.
Yeah, we've been talking quite a bit on the show about nuclear energy, and I know solar is another one that's been the topic of conversation just because of some policy adjustments that are impacting that space. I know you've been monitoring some developments in solar stocks and utilities. Let's flip over to those because I think that's solar was something that people were very very excited about, but it's looking like the tide might be shifting a little bit.
Yeah, I think this is a tough one because there are so many factors that go into solar succeeding. So on the one hand, you have kind of the legislative side, right? Like what is how much spending, how much support is going to be there for this industry? What is done to prevent China and other countries who produce large amounts of solar equipment from kind of dumping it on the U.S. And kind of hitting domestic producers? But then on the demand side, you've got high financing rates, right? Like all of these projects, especially on the residential solar side, like need to be, financed by homeowners. And so if you have rates at, mortgage rates at 7, 8%, and the housing market isn't doing anything, people are not, spending that money to upgrade. They're not going to eat that cost the way that they would in a lower interest rate environment. And so there've been a lot of headwinds for solar, but there are a couple individual stocks that are um, seeing some interest. I think Keith, I shared a chart of Solar Edge. That is one that kind of found support back at its post IPO lows and has been starting to trend higher. So I do think there are some counter trend opportunities here. Maybe the sector, all of the bad news that's been out there is kind of already out there, and so
Mhm.
I think people are looking for opportunities there to pick their spots and see, hey, is there an individual company that maybe has fewer headwinds than everyone else that might be a leader and kind of come out of this, in a much better spot. So I actually shared this chart right where that arrow is at the Toronto Money Show back in September, and this was kind of one of my counter trend or like contrarian theses that I outlined. Sorry, theses is definitely not a word, but
I think it is. I think it's whatever. That's one of those ones where it's like whatever. I think there's a few words like that. I'm trying to think of another, but it's like however you want to say it, we get it. No
yeah,
worries.
it's fine. Don't worry about my
Just
title as editor in
theses.
chief. I'll make sure
Theses is
that's
just
not.
weird to say. I feel like I'm like back in like a college seminar or something. Where like,
Yeah,
oh,
exactly. I should have
like
I should have chose a different word entirely. But anyway, this was kind of one of those contrarian plays that I think back then people were looking at me with their eyebrows raised, and now we're starting to see some momentum and the fundamentals are improving a bit here. So the next chart I have is a similar company. I honestly don't know the fundamentals as deeply on both of these, but a similar setup in Dachau New Energy. It's ticker symbol, let me see, DQ, I believe.
yep,
So not the
not
not the
Dairy Queen.
milkshake that you can put upside down. Yeah, DQ. So very similar setup here, trading right back at a key level, kind of that confluence of support and resistance that has been a major transition level over the years. It's kind of stabilizing here. So if you want to be more conservative, you wait for it to kind of start moving higher from this level to get confirmation that buyers are in control. But I think fundamentally, I got to do a bit more work here to understand why this one in particular might stand out. But from a technical perspective and from a sentiment perspective, it stood out as something that people are not paying attention to enough. So yeah, just another
Yeah.
way to look at things. I know there's a lot of popular stocks out there, but every now and again, you got to look at something new and kind of see
It
what's
is
going on.
interesting how individual stocks tell stories about either the economy, consumer behavior. I know this week we have Lennar Home Building reporting,
Yeah.
Costco, CarMax, all those things I think give you a little bit of insight into the main street, what's going on. And so I think that'll be interesting to look for this week. Those aren't obviously the big names that get a lot of hype around earnings, but they do signal things that could be indicative of broader economic trends.
Yeah, I think Costco will be an important one. Obviously, given the way that they manage prices for their consumers, with the tariff situation, how are they seeing any read throughs from that? Probably still too early to see a large effect across kind of items, but it will be something that people are paying attention to on the commentary side is how management is addressing tariffs. And this has been a huge winner for years. And so I know there's a lot of retail investors and traders that are involved here on the long side. So that'll be an important one to watch. And then home building, like we've been talking about, the housing market has kind of been on a freeze for the last 2 years. If there are two reasons why you move. You either have to or you want to. And I think a lot of the people that wanted to move during the pandemic, they did, and that's why we saw a large increase in housing prices and all that stuff on the supply side getting eaten up. But from a from a from a demand perspective, I think sorry, I flipped those. On the supply side, I think the labor market is going to hold the key here because everyone that wants to move has already kind of moved. But the next phase is like if you have to move, like you lose your job and you
Yeah.
can't afford your payments anymore, or like you have to move somewhere else to get work because there's no there's a return to office policy. So I think that's kind of the next leg of opening up supply in the housing market and getting people to kind of bring down prices in terms of their asks is the labor market softening further, unfortunately. And I think that's kind of the key. The Fed is paying attention to the labor market because so many of the things we've talked about today are tied to consumers being healthy and having cash available to either spend or invest. And so if we start to see a material uptick in initial jobless claims or continuing jobless claims, that will indicate as a leading indicator that the labor market is softening and that the economy is probably headed for a downswing. So we haven't seen a major uptick here, but they are slowly but steadily rising. So we've already seen companies cut the amount of jobs that they're hiring for. They're doing more with less people. And the next phase of this is going to be, okay, our margins are being hit, our earnings are being hit by these tariffs. What's the easiest place to cut costs? It's going to be headcount. And so that has kind of rolling effects through the economies, which is why a lot of the economists I follow, a lot of people I talk to are watching this very closely. Outside of the regular job growth numbers that we
Yeah,
got 2
there's
weeks
been
ago.
an uptick in reporting just around new grads finding jobs, and I think those entry level
Yeah,
positions. I think that's something to watch. People graduating theoretically with some debt, and those are the things that Gen AI is risking to replace, and it makes you wonder like what the new model for almost like apprenticeship entering the workforce will look like. But I think that's another
yeah,
that cohort. I think their unemployment rate's the highest it's been in that cohort since 2021. So I know a lot of people are looking to those guys as well to see how the college kids are doing. They're getting out of school, and it's a really tough job market for them. So
yeah,
um, watching that one as well.
yeah. And I think again, going back to the onshoring and like bringing industry back to the U.S. If there's going to be there's going to need to be a retooling of skill sets. So more people attending trade schools, more people becoming plumbers, electricians, all of that stuff. Things that AI cannot do right now or
Yep.
probably can't do for quite some time. So I think the longer this goes on, the more we'll see people kind of taking signals and saying, hey, my cousin graduated 2 years ago and really struggled to find a job. Instead of going to college for XYZ degree, maybe I'll, try out trade school. But yeah, it's definitely an interesting point in time right now. But I think among all the noise, that the labor market is key. So watch those initial jobless claims. And if we start to see a material tick up, that's, signs that things are slowing. And I know the Fed will be watching too. So
Yeah, and we will be watching the Fed this week. Tom, thanks you so much for stopping by. This was awesome. Loved all the perspectives you're bringing as just being at the nerve center of the community. You'll have to come back perhaps when we have Ryan Cohen and Roaring Kitty on. Can't make any promises, but we're gonna try.
yeah,
And I hope you
I'll
have a good
I'll
rest
try
of
to
your
send him
week.
a DM and see what we can do.
It
But
should go
appreciate you having
through.
me, and yeah, hopefully I did shy. Yeah,
Crushed
I
it.
can't think of the words, but
A
yeah,
service. A
hopefully
service.
Shy is proud of me guest
Shai's
hosting
probably
today.
sleeping. It's his birthday, but when he
Nice,
wakes
happy
up, I,
birthday,
I
Shy.
I know he's gonna wake up and watch it first thing he does when he gets up, and he's gonna love
It's
everything you
exactly
said.
what I would do on my birthday as well. So
Exactly,
shout
best
out
way to
Shy.
spend it. Shout out to Shy. And thanks again. Thanks again, Tom. And for everyone else, we'll see you back here tomorrow at 9 a.m. Eastern with more market news and headlines.